Hello, I'm Tim Winter, Portfolio Manager for the Gabelli Utilities Fund and longtime utility analyst. I want to highlight today why utility stocks are just beginning to heat up. Let's start with the big picture. Interest rates. The entire yield curve remains elevated relative to the past 2 decades. The 10-year U.S. Treasury yield is coming down, but it had risen as high as 5% when utilities bottomed last October. Recent data indicates the economy may be slowing faster than hoped for, and inflation's moderated and the labor market's cooled down. The Fed had outlined 5 rate cuts over the next 18 months and 9 times over the next 2 years, but it could have to move faster than that. A lower yield curve would benefit utilities. It would mean lower capital raising costs, higher valuations, and some customer bill mitigation. Utilities yield nearly 4% today and tend to raise the dividends every year. Another upcoming catalyst is the end of the election year rhetoric, especially regarding climate change and energy policy. Concerned that there could be major changes will be over by the end of the year. The transformation to a low carbon economy is going to continue in earnest under most election year scenarios, at least in our opinion. Moving to utility fundamentals. Electric demand is on the verge of an acceleration, one that we haven't seen since the 1970s when central air conditioning was being introduced. Artificial intelligence, AI data centers, manufacturing onshoring, electric vehicles, all of these things mean a power surge is coming. At the same time, coal-fired power plants are being retired. Questions abound as to whether the power supply can keep up and whether the grid can handle it. The U.S. and the world need more energy, need more power, and need more energy infrastructure. The good news is utilities make money by investing in infrastructure. The dynamics support long-term earnings per share and dividend growth. Currently, utilities are expecting about 5 to 7% earnings per share and dividend growth over the next several years. When you combine that with the 4% current return or yield, you get almost a 9 to 11% total return. Now let's talk ongoing consolidation. The utility sector has been consolidating since the mid-1990s. We've had over 125 deals. We've had 3 announced this year. Elite is being bought by Global Infrastructure Partners. Avangrid is being bought by Iberdrola. And Atlantica Sustainable is being bought by private equity. The large infrastructure funds are scouting the country looking for infrastructure assets. For all of these reasons, utility stocks are heating up, and we think the fundamentals support long-term, healthy total returns.
Tim Winter is a portfolio manager at Gabelli Funds. The above webcast is an excerpt from Gabelli TV that appeared on August 5, 2024. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of March 31, 2023, affiliates of GAMCO Investors Incorporated beneficially owned less than 1% of all companies mentioned. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800-GABELLI. 800-422-3554-914-921-5100 fax 914-921-5118 info@gabelli.com.